Thank you for not taking my valuable table real estate. Oh, valuable real estate. Foreshadowing. Woo. Okay. Everyone ready? Cool. Is this a good volume? Should I speak wider? Okay. I'll take a POI, probably from both teams, around 5-ish minutes. The problem with scarce, illiquid assets is that it is most often a better strategy to sit on them and to hoard them than it is to put them to good productive use. That we've seen many companies use this as a strategy to form monopolies in markets, right? That we've seen many companies or people use this as a strategy because they'd rather speculate on their asset than ever have it sold. And the consequence of that is you have so many things that are so incredibly scarce, like land in a downtown space, or telecom spectrum, or taxi medallions that are being kept by a few individuals or people and never really put in use, while everybody else has to fight for the scraps that are tradable on the market. We think this is a poor allocation of market resources. We think this is not how markets are supposed to work. We think in the worst cases, this deprives people of really important things like home affordability. Firstly, what do we think this is likely to look like? I think the info slide does a pretty good job of explaining it. In terms of how often these prices are set, this is going to vary industry by industry. For example, maybe for land, that's going to be assessed at a reasonable, so maybe like yearly, that's going to change the valuation of your land. For other assets like taxi medallions, maybe that'll be like every 4 years. For radio spectrum, maybe every 2 years. It depends on what industry professionals think is the correct standard to do so. I think the variety of incentives why they're likely to set a reasonable standard. What is the main crux of our case? We have really one point, which is that hoarding is bad. We think that's an issue in the status quo. We want to prevent it. Why do individuals, entities, companies hoard, right? Why do they sit on it without using? I think there are a variety of reasons. One, and the main one for a lot of assets, is that you can speculate on those assets, and it's better to speculate on your asset by holding it than it is to sell it right now. Why is this the case? One, because a lot of the taxation that you get from gaining, from profiting off of your speculation is capital gains tax, which only happens at the end. So there's actually no cost to sitting on your property right now, only cost when you sell it at the end, and there's not really cost. Now the other tax that's imposed is a property tax, right? Oh, but if you sit on your land for a while, you're gonna have to pay property taxes on it every year. Well, that can be counterbalanced very easily. If you don't plan to sell it right now, you can undervalue it, which means that you can pay less property taxes. You can also simultaneously rent out that land if you want to, right? In order to recover some of those things. And yes, renting means that it's going to be put to some productive use, but I can get to this later, but I think renting is ultimately a far more inefficient and worse allocation of property and ultimately less productive than is just owning the land yourself, right? I don't know, look at Asia. Cool, moving on. Right? So you can potentially rent, but a lot of times it's just better to sit on it, right? And you can lower the taxes of that. And then when it's time to sell, or you decide you're selling, you can now put up much higher valuation on it. And so when you enter the market, you can kind of game the market by it's kind of like how oak trees will have tons of acorns at the same time, like the masting, right? Like this happens in lots of markets where now people this is a good time to sell. People have money. We're going to put all of our property on the market, but we're going to value it at much higher rates so that the demand artificially goes up, and so that the price of those assets is sky high. Yeah, POI.
Many cities that deal with the exact problem you're talking about simply tax vacant or unused land. Why couldn't we simply do that rather than this policy?
Okay, first of all, I think you can tax vacant unused land, then they'll rent it out, which I guess is some mitigation, but I'll get to later. I think renting is a lot worse than people just being able to own their own homes, maybe grow their own equity, maybe be able to hang up a picture without having to beg their landlord to put a nail in the fucking drywall, right? But secondly, I think this doesn't apply to anything that isn't just land, right? So any other asset that we talked about, like spectrum or medallions, and I didn't think of other assets, but I'm sure Adam can think of some. Adam, do that. Cool. All right, so the last thing I want to note here in terms of the problem is that it's crucial that these are both scarce and illiquid. The fact that they're illiquid means that there's a lot of friction in the negotiation. It means that you have this timing buffer in which you can kind of price low earlier to evade property taxes, but then price high later when you decide to put out on the market. And the market doesn't instantaneously react to kind of fix things, right? What are the harms of this problem? The first harm is that you have unfair distribution. So companies can sit on telecom spectrum, for example, to outcompete other companies and maintain a monopoly or oligopoly. Look at Canada's telecom industry. It's just Rogers and Bell, and they're both shit. Why do I have to pay twice twice as much for internet, that's 3 times worse than what I can get from Verizon. It's terrible, right? But also people sit on land, which means that people can't afford housing. Homelessness rates are skyrocketing in most metropolitan cities, right? Fun fact from Ethan from before is that there are more vacant houses than there are homeless people in most major cities, right? It would be great if that land could be bought instantly and you could lower the price because you actually have people buying and selling in a market instead of just sitting on land until the speculative value increases until they're willing to sell, right? And ultimately what that means is that you have people actually being able to access scarce resources and have access to them. We think that's good. Secondly is the poor and inefficient use of resources, because when you're sitting on something, it's not being used well. Even, I think that's pretty self-explanatory, but then they talk about renting. I think the problem with renting is that if you, let's take restaurants for example. If you do really well, no thank you, they'll raise the rent. If you do poorly, then they'll be more strict with the rent. You don't actually have incentives to invest that much into your business because the owner of that property will just take away whatever profits you want. Marxism, right? Marx thought of this over a century ago. It's pretty common sense. The third is on tax evasion, right? The strategies we talked about earlier are used to avoid billions of dollars of property tax every single year, which is money that often is cut first from social programs and other forms of spending that people are reluctant to when budgets get thin. Lastly is on the harms of speculation. This often leads to large bubbles. Housing bubbles are often some of the most destructive and ultimately destroy the lives of people who had nothing to do with them, that don't own any land, but because their business went under, because interest rates went higher, and now they don't have a job, they end up with no health care, they can die, their family loses access to the things that they need. POI from opening.
So why are you actually fixing the problem in terms of construction and housing costs? It's not actually true that you're making these houses cheap enough for the people who are homeless on the street, even if they're setting the value of the homes. Why do you fix this?
Good. Okay, how do we fix this? That's the second part of my speech. Thank you. So I'll deal with that at the end. Firstly is that you can, what did I write here? Oh yeah, the first is that you can buy it at any time, which I think prevents people from sitting on it, right? So then secondly, what's the strategy for then people who want to sit on something? It's just to price it insanely high so nobody else can buy it. We can't do that anymore because if you price it at 3 times the actual worth, then now you're also paying 3 times the property taxes, and that's no longer something that you can evade. So it becomes extremely expensive to try to hoard and no longer a feasible strategy for the vast majority of individuals. They're talking about homeless people. How do we help that? Well, yes, homeless people can no longer buy $1 million condo, but the point is that $1 million condo becomes $500,000, which means that you kind of have this thing where it's people in cheaper homes than older homes then move to the new stuff, and then it moves, and now eventually have more room in homeless shelters, or it's slightly cheaper, or it's cheaper overall, so that it's we have more capacity in the city to kind of take care of people on the street, et cetera, right? What does this do overall? We think it fixes the problem that has emerged in most major markets revolved around scarce, tradable, but illiquid assets. Is that people sit on them instead of using them for good things because that is the best strategy. We change it so that they are forced to sell. We make the market work the way it was always supposed to. Incredibly proud to propose.
This exacerbates large monopolies, it makes wealth inequality much, much worse, and most importantly, it systemically depresses housing construction and innovation. We'll go through those things one by one. First, responding to some of the monopoly points we get out of OG. There's a huge problem here on your side, which is that big companies can buy up key assets from small companies that will, rather than buying the whole company. It's much easier to just buy one key patent than to take over all of your intellectual property. But the only thing that these big companies need in order to stop these small companies from infringing on their market space is that one key contract that you have, or that one key patent that enables you to compete. I don't think antitrust regulation will stop you from doing this because antitrust doesn't stop monopolies that hoard patents in the status quo, and it's also probably a lot easier to justify to a regulator that this acquisition is fine when rather than removing your competition from existence, you are just getting access to one of their assets in particular. Regulators are probably just in the pocket of companies anyway because they want high-paying industry jobs after they're done regulating, so they'll probably allow this abuse. But also, small companies can't set a high enough price to prevent big industry from buying it from them, even if their patent is in fact that valuable valuable and they want to hold on to. Why? Because they're capital constrained. They don't have a stable flow of income yet because they're still growing, and they have to access this capital at much higher interest rates because they are more risky than larger companies, and so they aren't able to fund extremely high price caps and wind up having to get it up. Next, on wealth inequality. Capital gains taxation is currently the only way that we tax the returns on capital. Returns on capital are what make the rich people rich. This is like the Einstein quote about the most powerful force in the universe being compound interest. It is important to take some money from the rich because most of their money does not come from work or labor or things that are taxed otherwise. Without capital gains, you're basically not taxing the rich anymore on the majority of their assets and the majority of their income. Now, Gov may say, oh, but rich people own lots of like buildings and patents and things like that. Not anymore, they won't after this motion. The important thing is that this causes a systemic change in what sorts of assets people choose to own. That is, if you want to keep as much of your assets as possible, if you don't want to pay this annual tax, you're probably just going to switch to owning like a bunch of stocks and bonds and other diversified assets instead. Okay, what that means is that this will further distort the economy in a negative way. As explained, this pushes people away from illiquid assets and towards liquid ones. Liquid ones are already, like, in some ways desirable because you can sell them easily, but this makes them even more desirable because you don't have to pay a continual annual tax on them based on their value. Important to understand this basic economic principle. In general, the economy is doing the efficient thing before the government comes in and starts taxing, until everything has the right amount of investment. That is, underinvested things require less investment to produce higher returns. If you give a tractor to a farmer who doesn't have a tractor because there's lacking investment, that farmer's productivity explodes massively. If you upgrade some random office worker from like Windows 10 to Windows 11, that does not substantially increase their productivity. When you are doing investment, just like in absence of taxes, this means that you invest more in things that return these higher returns. Problem, when you start taxing only certain kinds of investments, it distorts from this default optimal allocation. The things that have a tax on them become relatively less valuable and you underinvest in them. Two problems that result from this. One, we probably need more capital right now in like real estate and housing markets. Like we have a massive housing crisis. I get that they have this case about like somehow housing becoming cheaper for ordinary people, but the real problem is that there are more people that want houses than there are houses in existence, meaning they're just going to bid up the price until they can get a house. What we actually want is more houses, more supply so that the price actually comes down. Insofar as investing in like buildings and real estate is probably much less profitable under this model because you have to pay this annual tax on the illiquid asset, you're going to engage in less of this new construction. But a second problem, you also probably need more capital doing things that produce patents and produce innovation. Companies developing new drugs, companies inventing new industrial procedures, things that actually improve the economy. I also think that these companies are more likely that are producing new patents to be like small pharmaceutical startups, etc., rather than these liquid assets in the stock market. Like Nvidia probably has enough money at this point, guys. Like their stock going up even more because rich people decide to buy all these liquid assets instead doesn't help much. But a small pharmaceutical company pursuing patents that will be taxed, like we probably want them to do that, is good when there are new drugs. I think a couple of these things, they happen in any world, but the scale of them definitely depends on the extent of this annual tax. Here's a bunch of reasons why the extent of that annual tax is going to be extremely large. First, governments around the world are fiscally burdened as growth has slowed across the developed world because you get smaller and smaller returns to investment, and also they took up on extremely large amounts of debt in the pandemic. Most of these countries don't have the optionality to just be like, okay, I won't pay their debt, so in the point at which they have to pay back their taxes because they don't want like the IMF to step in and start like controlling their economy, or they don't want to like have their government collapse and never get investment again, they wind up needing to raise taxes substantially. If they're implementing this tax, they're going to want a lot of revenue for it because it is a uniquely good tax for them. That is, the number of people who are offended by this tax, who are pissed off by this tax, is pretty small because like your average person in the world does not own like a valuable illiquid asset. They have much smaller levels of assets. So even if they like have a home, like clearly they're making faces about, like they don't own as large of a portion of like assets as the rich do. This falls much more heavily on the rich. It is opposed by a smaller group of the population. I will take closing.
Yeah, so just so we're clear what your stance is, are you laissez-faire all the way, or would you like there to be some form of additional taxation instead?
Capital gains taxation is great. I'll talk about it in just a second. Okay, great. What I think this means is that because the average person is less opposed to this tax because they own very few rich assets compared to a rich person, this tax is going to be set pretty high, triggering all of the impacts I gave. Lastly, I think this massively discourages innovation. What happens here is that corporate taxation pushes companies to engage in innovation. Why is this? When you engage in R&D, when you engage in investment, you are allowed to count that against your profits for the year. You are able to be taxed on less of that income. This causes you to engage in more and more investment, more and more innovation. We think this probably has some positive externalities where everyone benefits from this innovation. Government may get up here and say, oh, but you'll just be taxed on that income at some point in the future. This isn't true for a few reasons. One of them is the step up in basis loophole where you never have to pay these taxes in like the rich economies ever, and you can just avoid them and the company grows. Okay, lastly, why is like innovation important? You always have new problems like climate change and pandemics. Innovation has a lasting impact over time. It benefits all future generations. Even if you're not using the specific innovations you benefit from, you can use the innovation to make more innovations, i.e. computers. You can also build upon prior innovations, i.e. someone had to figure out how to make polymers generally. You couldn't invent new polymers today without the first polymers. And finally, most economic growth comes from new ideas. Population and resources are fundamentally limited. This allows you to use those more efficiently. When you get new drugs, when you save lives, we think that's extremely good. You absolutely should not discourage people from investing in these critical illiquid assets. So proud to oppose.
No disrespect. After my speech, I'm gonna run to the washroom. I can go behind, so I'm just gonna sprint out. Sorry about that. Yeah, I'll wait till the no worries. Cool. 3, 2, 1. I'm going to start with 3 pieces of engagement on the OO. The first is on monopolies, on this claim about sweeping key assets and like railing smaller firms. The first thing that I want to claim here is that moats aren't free anymore. So cornering assets is actually expensive because perhaps they can engage with a lot of small companies, but it costs a fortune every year. But this is perhaps good for small companies, and I want to explain why, because they get clearer prices and easier financing on their long-term gains. There are 4 ideas to this graph. The first thing to say is that to own the corridor, a giant has to post a really high keep price on every single parcel that they ultimately gain. Yes, the small business might get their IP acquired, but it's very expensive for the big firm to continuously protect this, and it's massively expensive because they have to valuate it higher, or else someone else is going to buy it by them, because they always can. So this implies that there's a reoccurring cash burn, so hoarding isn't likely to happen because it only survives if they can use this to continuously create more value than rivals. But the reason why this is unlikely is because the small firm spends all of their time developing this sort of IP, and the big firm hasn't, so they can't just take it and integrate it, because in the period of time of integration, it's difficult for them to do this effectively. 2, there is perpetual contestability. So a monopolist's assets are always viable at their posted price. If an entrant can use one link better, they take it. So barriers are better and lower than today because there aren't no holdouts, there's no secret deals, and there's more incentive to be transparent about how you're likely to use assets. Well, 3, and I think this is important, transparency means that there's capital for these actors, because public key prices give small and medium enterprises a hard target to crowdfund and finance against. Generally, banks lend when the collateral price and the closing window are certain, and right now the price is unknowable because there's no incentive to keep it knowable and clear. This is important because it means if you need this money, if you want to go push into other things, and generally you have other windows of importance outside of the one IP that you exist, you can do this and you have access to finance a lot more as a small and medium enterprise. So this is perhaps good for the scarce assets that they generally own. The last thing I'd say here is that you have less rent from politics, because when you pay the posted price, lobbying for special variances or inside tracks loses a lot of bile because it's a cheaper field for all the small players that exist. So what this means is, in the sum, small firms just aren't fucked for 3 reasons. They can price it in a strategic value. If one patent is existential, they set a pretty commensurable key price and they pay a small annual fee, which is cheaper than today's endless defense costs, because they'll generally be pushed out and they probably have to protect their IP when a big firm tries to recreate it anyways and they have to engage with them on legal battles. So this isn't actually, like it's not symmetric. They have other finances that exist they perhaps likely avoid. But 2, there is a lower tax on growth, and this is important because we remove corporate and cap gains tax. So this is important because you have other cash flow that's now free for all the things that you want to do on our side. It's not like they lose no money from the erasure of other forms of taxes. And 3, there's probably good targeted guardrails. And what I mean by this is that there's probably ways the state does this that makes it so you don't just automatically get railed and exist. The flip that I'd say to them, and this is an important flip, is that big companies already in the status quo abuse IP by saying, look, we have this previous thing in the really big past that we've actually done, but we did it first, but it was secretly in-house, and we pushed back against this. The need to always publicize things, to always keep your upline price, makes it harder for big companies to use IP in the ways that they currently do anyways. 2, I'd say, and this is the second piece of rep, Harberger, like on the stuff about creating unoptimal investment, on the stuff about fleeing to liquid assets. Look, I'd say that on our side, you increase and you don't reduce housing and real investment. There are 4 reasons for this, and I want to explain them really clearly because I think they're important and they need engagement from opposition. The first is obviously there is a meter on weighting. Idle or underbuilt land that is priced at like $1 million, maybe the thing is like 3%, whatever the fuck, costs a lot of money per year. It costs like 30 grand a year now to necessarily keep and uphold. A surface lot that is making 10K can't carry it. So owners either have to build, they're incentivized to make development earlier because the tax is now applied onto them because of this, or they have to sell to a builder who will, and that's the point. So that's the important switch in development, right? That you have to do this for it to succeed. But 2, and I think this is important, assemblage risk collapses. If you have visible prices and you have forced sales at these prices, developers will budget and close multilateral deals, and projects that historically in the status quo die because the last sort of parcel that's important is now in ransom, and the company that held it off for a really long time is like, no, I want more and more and more, and you can't do shit because you can't force them to sell. It doesn't have an incentive to sell. They can keep pushing further and further and further. And I want to be clear, here are the sorts of examples that Arpi told me to think about in his speech that I don't think are just about urban housing, because I think it is enlarging, because the urban housing kind of looks like this. It looks like a mid-rise that needs like 5 adjacent lots perhaps. Today, the 5th owner holds on to their lot. And maybe the POI from CO is like about why other mechanisms can work or push them out. I'll engage with this in just a brief second. But the thing is, if you have your posted prices, the developer pays the sum this month, and then they break ground next quarter. But it also engages in transit, because if a big billion transit project is delayed by 3 owners under Harberger, their attachment is compensated at their keep price. So it means the builds price end up working. So for public infrastructure, it's faster than the consumers. And thirdly, on IP, by the way, a shelf therapeutic patent moves to a biotech firm that actually trials it, because keeping it idle now burns cash, so you don't have to hold it accountable. So there's 3 different ways that this turns scarce goods into usable public goods that are necessarily good. That's the flip. That's why it's more important. Briefly, why are the sorts of mechanisms that exist insufficient to work today? This is responding to the earlier POI from CO. The first thing is I actually just think today's distortions are really easy to game, because here's the thing. Companies, when owners dodge vacancy rules, they'll dodge them with token use. They'll say, no, this is actually a charity. This is actually a public service. Specifically, by the way, the free options weight remains, so all of these sorts of tax distortions persist, and owners already have a historical track record of being able to distort and get away with these taxes, whether they window shop their assets or use them as tokenists for other reasons. And this is important. It's inexpensive compared to Harberger, so their incentive to wait is really high. But 2, obviously, you don't have the ability to gain it as much because it's far more clear. It's a simple 3 sets of rules that you have to engage with. But 2, importantly, vacancy taxes only hit empty parcels. They miss underused parcels. So things like parking lots or truck shacks and all non-land bottlenecks, things like IP, like spectrum, like exclusive rights, don't end up engaging on their side of the house. So this is why it's larger. It's bigger in scale, and the current laws don't exist. They also don't force transfers or public these sorts of things. So parcel assemblies and rights of way still stall on the last holdout so they can maximize the amount of money they end up getting. So this is important. I think that's like really why the current mechanisms don't work on the comparative. I think that's broadly very engagement. The last thing I want to do in this speech is I want to explain the impact of the hoarding claim really well, because I think it's important, because the end point of this impact is that you move scarce assets to people who use them best. Obviously, the mechanisms exist. I think they're pretty clear. But the impacts of this is 2 things. 1, I think ultimately it's a flip of what opposition says. You actually get substantially more productivity because a lot of the inputs will flow to higher productivity users. People will buy the assets when they're expensive because they think they can turn a profit off of them, and they're likely to work on them well. So it means your optimization is likely to be good. But 2, friction, when it fails, like we're specifically with housing, means that you can buy things and create more supply. So pressure ease happens meaningfully, especially in high productivity cities. So it means housing in the most important places in the urban areas actually get built a lot more faster. And the last thing I'd say here is that you publicly capture monopoly rents, because when you post a sky-high price, the annual levy on this turns into a choke point every single year, so you can't afford to continuously wait anymore. The last thing, very, very briefly, is that there is no more, like today you cling to, it's like stuff on taxes, and the thing that I'd say is that you cling to mediocre assets today, but you avoid a tax bill when you sell, but you don't have to do this because selling is tax neutral on our side of the world, which is probably more importantly, it's high to your highest self-assessed price, so it means portfolios tend to revalue towards the highest return.
Remind speakers, 7 minutes and 15 seconds is absolute limit. After that, not credit the matter, you say, call on the PO, and we'll be opening opposition case, and we'll call after this case.
figured that would be easier.
That's fine. You're just gonna sit in that chair and not be able.
Yep.
Well, you have a computer. That's fine.
Do you want to check?
Why would I want a chair?
Sit. Like it's
You just have to sit without a table now. You know that I don't. you know that. This is like I do.
have epistemic access.
You did have epistemic access to the information. This is correct. Sorry, I always have too many papers, though. This is a lot for a DLO, so my bad. Whoopsie. Yeah, I don't know. Don't ask me questions about that. That's fine. No, I just am here to absolutely destroy the trees. That seems to be my main goal at every debate tournament, and that doesn't mean it has to be yours. It's now organized, I now just need water. Okay, I'm assuming that everybody's ready, and I'm going to begin starting now. First, I'm going to tell you why capital gains taxes are really awesome, and the fact that you get rid of them is really bad. First thing, capital gains tax is the only way that we can actually tax liquid assets in the economy, which is where most of the really wealthy people have their money. In terms of Bill Gates has tons of stuff in the stock market. When you move stuff around, that is the way that you get capital gains tax. As in, you try to take money out, you end up getting tax on top of that. Right now, when you get rid of that, you have no tax on these liquid assets. Remember, this specifically focuses on illiquid assets and moves this taxation away from liquid assets where the rich actually keep most of their money in the status quo, meaning that you get significantly less money out of these things. We also think that capital gains taxes are really good because they force you to make better investments, which is better for the economy. Why? When you're have a capital gains tax, you're less likely to move your money around because of the fact that you're going to get taxed on that moving your money around throughout the stock market. Meaning that when you make that initial investment into a stock, you're not going to choose something incredibly risky or something that you're going to want to move out of, where you think that you want to going to have to shift on later. Meaning that you then don't end up moving your money as often and make smarter, more technical, better investments in the first place, which allows us to have better improvements in the economy overall. But let's now talk about hoarding and talk about OG's arguments. Few problems. First thing, let's point out the main issue with their property tax stuff. There's a few issues with this. One, there are property taxes. If you own a lot of land and you are still getting taxed on it with property taxes in the status quo, you don't magically not have to pay money on the land that you are keeping and hoarding in this way. You are still paying money, which is just going to be significantly worse. So, also, the way that they say you are evaluating land and evaluating land for taxation purposes is incorrect. You don't get to personally set whatever your land is valued at and then change it any given day. You can't say, my land is worth $1, tax it at $1. The government doesn't allow you to do that. They have separate evaluators and people to help make sure that it's something somewhat reasonable. Yes, you can take it a little bit on the market, but it's not this extreme case they're talking about. Meaning that you're actually getting taxed in the status quo through property taxes, similar amounts as when you sell things. Meaning that this hoarding thing is not actually the problem literally at all. It's incredibly strange. But we don't think that, so this is the main issue with that. But let's talk about hoarding specifically in terms of the housing crisis, because this is one of our arguments as well. What is the problem with the housing crisis? The problem is not enough homes. They try to say that there's an issue where there's plenty of space in areas and that there's plenty of homeless people and there's plenty of empty vacant buildings. This is actually just not correct in most cities around the globe. This is not the source of the problem in most places. For example, in New York, there are a lot of vacant lots, but not enough for all of the homeless people. Plus is the fact that people are hoarding these things because they already own the assets and they want to make sure that people are paying them enough to get money back to it. You don't actually incentivize them to put this back out on the market because they're still paying the illiquid asset tax, right? They're paying a little bit, but they can set the value. They're paying some percent. I don't think it's significantly more than what the property tax is that they're paying per year personally unless they sell it. Meaning that they're still paying some level of taxes on it in either world. It doesn't magically change the entire valuation of whether they sell this property or not. But we think that the main place where you change things is actually in the order of building houses. Why? We think that right now you need to build more houses. That is the way that you actually decrease the housing price in the economy. If you have more houses available for people, then there's more options for people to buy, meaning that the price of housing in general goes down. Why do we think you entirely stop or prevent people from investing into building houses? Because of the fact that people don't want to put their money in liquid assets when it's the one thing that gets taxed. It means that the big corporations that are investing, the things that can actually be hey, let's build houses, let's build apartments, the places with the capital to do this have no incentive to put money into it at all. And if you believe that there is any shortage of actual housing or that increasing the flow of housing into the market could lower prices, which is kind of how the market always works, then you are absolutely preventing investment. Yes, there is some hoarding, but at least there's building. Meaning that when you start forcing people to get taxes on only one type of asset and not the other type of asset, you artificially force the economy into certain types of investment that are worse. Otherwise known as these liquid assets. This is what Seamus also makes as an innovation point, which I'm going to use this as a transition into. Let's talk about innovation. Let's talk about other types of liquid assets, such as patents, the things you innovate. Remember, Companies right now are actually pretty decent at deciding where to put their money. They have smart people who are a part of them being like, hey, where can we make the most money? Where do we get the most returns on our investment? Meaning that when you don't have taxation from the government, they're able to make pretty reasonable decisions on what's going to have the best value add. When you add this kind of arbitrary infliction on what types of things they're allowed to invest in, you force them away from the things that are the most profitable and the best for society. Meaning that because you know that if you invest in research, for example, on certain chemical things that could maybe help stop the climate change. Let's say you're doing research on bacteria that's going to eat all the CO2. That patent is worth much less to you now as an investor because you have to pay high levels of taxes on it, which you don't have to pay on the money that you put into the liquid stock market because there's no taxes on liquid assets based on this Harberger tax. You take them away with the capital gains tax, meaning that you no longer are putting your money into investment into these illiquid assets or into a liquid asset because it's less preferentially favorable for you because you get less out of it each time, meaning that you don't actually have investment into innovation, which is absolutely necessary in the status quo with the problems that we face. Let's take a POI from closing.
Yeah, your partner explains why both of your alternatives won't work insofar as people could just take loans off against their assets. They never actually have to pay capital gains tax because they never cash their losses. Bezos doesn't cash his assets every year. He hasn't paid capital gains tax in like decades.
Okay, first thing, Bezos is not the only person, and that there's plenty of other rich investors, for example, like different firms, all of these sorts of things that have incentives to move their money at least some of the time and end up having to and pay some level of capital gains tax versus what you're discussing, which is very specific cases. We say you have to pay some money versus none. We also think that one of the main problems is that you inflate this problem even worse by forcing people to go to the stock market over illiquid assets. We're saying that even if you have some problem with people like getting out of paying taxes in the illiquid market in the status quo, you make this significantly worse by forcing them all into the liquid market now because they can find that as a method to 100% get out of paying taxes. This is still a very, very bad thing, and you still are getting less money out of people total by getting them out of these markets. We are also telling you that that movement itself is very terrible for things like innovation because it is now more profitable, even more so than before, to go into the liquid stock market, meaning that you don't get the same innovation we're talking about. Why is innovation really, really important? One, we think the fact that there's massive problems in society right now that can only be fixed by innovation, in terms of when you can build houses for cheaper, or you can do things like solve climate change, or you can do things like invent new drugs that actually can do things like prevent the pandemic. You need investment into those illiquid assets, into these patents, into these things that are difficult to hold and actually take care of. This is the only way that we can solve these major problems. We need to actually make sure the investment continues going into these sorts of assets rather than other places. Okay. Let's now talk about monopolies, because I think that this is fairly important in the way that the OG tries to talk about this route. They try to say that small businesses are able to actually take care of themselves and afford things and not be swept up by bigger companies in this world. First thing, extend the reasons Seamus gave you for specifically regulators are very bad at doing regulation on antitrust laws, and specifically are going to get worse at it in this world, where you're no longer buying up the entire small company, but you are buying up specific pieces of property that they have that are actually their only way to compete in the market. What opening government tries to say is the fact that, oh, you have a lot of investment and you can now buy up things from big companies. Big companies can afford to set the price high on their important assets so that a small company can't buy it up from them because they have lots of capital flow that they can use to pay the tax that they have to pay each year. So if an asset's important to them, they can set the price high enough that nobody small can buy it from them. Small companies do not have this capital flow each year to be able to pay that tax. They have less certainty in their overall business deals, meaning that they cannot actually set value as high as it is actually worth for the individual patent, meaning they are a high victim of being swept up and being bought by big companies that do have the resources to get these things. I urge you to vote. Opening opposition.
I'm a very shouty favorite. I'll avoid being super shouty, but I'll do my best. Inshallah. Okay. My dad recently moved back from Nova Scotia back to Silly Creek because his house has been listed on the market for 2 years and it is not fucking sold. There is a problem in status quo in which a bunch of people have been sold the lie that investing the vast majority of their wealth into housing is the best way to have retirement or the best way to end up well. I think it's creating perverse incentives, A, politically, B, in terms of how money is distributed in the economy. We are going to flip the vast majority of OOKs and actually say liquidity in the market is fundamentally good because liquidity is the velocity that drives the economy and this is a necessary prerequisite to actually achieving anything writ large. First, a bunch of framing, because I think the problem with the front half is that they have a lot of crazy assertions that were largely not not realistic to how the world looks, then I'm going to make two arguments. One, why liquidity is good. Two, why we get asset accessibility, why it's the most important impact of the debate. First, on housing. OG says that property tax exists. OO also points this out, but they say that property tax is done poorly in status quo because people collude to price assets in poor ways and therefore avoid paying taxes. I'm not going to knife, but I'm just going to say why it's more likely than not that property taxes are done well in the vast majority of circumstances, and why there's probably symmetric incentives in terms of paying rent seeking or associating a price to rent seeking behavior on housing. The first is that they're based on market prices. That is, in the vast majority of metro areas, there's a recent amount of liquidity or constant selling and buying of houses, which means there's a reasonable ability to actually assess the current price of housing. There's not a lot of ownership of a single person owning all the assets, which means it's incredibly hard to price collude. And it's also, even if you do own the vast majority of housing, you're not actively selling the vast majority of your properties at a loss just so you can pay a lower property tax, because you're losing hundreds, if not millions of dollars in that process.
Point.
Two, in regions where most housing is largely fungible, that if you go to a particular neighborhood, most of the housing is similar, so if one house sells at a price, other houses also sell at a price or are similarly weighted, which means presumably property tax is relatively accurate in terms of how you're pricing assets. Finally, as I pointed out, it requires lots of collusion to reach the world that OG talks about, which is probably largely ridiculous. So rent-seeking's behavior is largely symmetric. That is, speculation is still valuable on both sides of the house. There's still an associated cost to speculation that the government imposes, because as CEO points out correctly, the government wants to disincentivize this behavior, and they're reasonably effective at doing it, or the incentives just don't work because there are other incentives that are overridden. And then finally, the stuff about vacancy, presumably that's not good. So the main reason and the main claim on housing we're going to push is that, it's not in terms of housing speculation that changes. It's basically who does the speculation and how ownership shifts. So we are going to concede that probably it's very likely that the vast majority of individual people like my dad buying and selling houses is going to decrease, and presumably corporate ownership of housing is going to be good, is going to increase. But presumably there are two reasons why this is actively good. First, and this is going to respond directly to OO's claim about housing speculation in terms of construction, is the reason why people don't build housing right now is because it's highly risky. That is, there's a large time gap between when you put in the initial investment in terms of constructing housing and when you get a payday from that housing that you actively get. There's a massive lack of liquidity in status quo, where it's incredibly hard. This is why the condo market on Toronto is massively bad, why there was a massive issue in terms of a bubble, because there was not an accurate price assessment, because there was not enough liquidity. You only get accurate price allocation or price assessment at the point at which you have high liquidity of buying and selling, with a large degree of transactions occurring in the market. We get better incentives in terms of housing buying. A, because you just get more renting. They give exact incentives. OG's own analysis that the more people are likely to rent as a consequence of this policy, you're more likely, because of this fixed cost, to rent out your property, because it's just actively good, because it increases the availability of housing. As people point out, the issue is not the existence of housing, but how that housing is actively being used. But two, you also just have less risk. That is, you sell your house earlier, which means you get the cost back earlier, which means as a construction firm, you have a greater capacity to invest in the future again, because of the high liquidity, there's a greater capacity to recoup those costs, so risk is lower. Second, then on monopolies. OO's claim is that you buy the rights, not the companies, of things like patents, and this is actively bad because it allows you to get away from monopolies. The fact is, this is not how monopoly law works. Monopoly law is not based on the number of companies you buy, but it's based on anti-competitive and anti-consumer behavior. At the point at which you can easily prove in a court case that they bought the vast majority of patents, they own all the analgesics in the pharmaceutical market, presumably there's a degree to which you can easily establish that a monopoly has existed, governments have incentive to address this. It's just not clear that they're so stupid that they're incapable of doing this. But two, it's also not clear to me that buying a startup versus buying the patent of a startup are uniquely different. Presumably, what we see in status quo is there's if you the most pharma tech startups make one product, then get assimilated into a larger company because their only thing is actively the patent. But it's actually comparatively better on our side of the house. And the reason is because in status quo as a firm, what you're likely to do is you're not necessarily incentivized to use your patent right away, because what you're going to do is you're going to sit on it, hope that it accrues in value, or you're going to be in a negotiation period. At the point at which this occurs, it creates a direct incentive for you to sell this patent and start using it right away. Because patents for drugs are not good in a vacuum. They are only good insofar as you are actively manufacturing the drug. So either a large pharmaceutical company starts actualizing the patent right away as opposed to sitting on it, or two, a government buys up the patent and starts selling drugs for your people. We see this relatively commonly in governments like India, where they buy patents or rights for production of things like vaccines, and therefore they manufacture it because it's quite popular. This just increases the capacity and scale for you to access those drugs, or the capacity to do it in the first place. Owning.
Do governments currently earn $0 from capital gains taxation because everyone takes loans that they somehow never pay back?
I think this is actually a incredibly common phenomenon, because the vast majority of people leverage their assets instead of selling them, because illicit capital grants creates a direct disincentive to sell your asset. So people do things like take loans against housing to finance future housing. People do things like take loans against existing assets to finance their spending, because as you point out, you create a direct disincentive to access liquidity on your side of the house. Anything that's actively bad for those reasons. So why is liquidity actively good in this round? 4 reasons. First, it removes perverse political incentives. The problem with status quo is that a lot of people have highly invested in housing. That is, people like my dad, or the vast majority of the middle class, have active incentives to jack up the price of housing because it is their one and only asset that the vast majority of their wealth is riding on. This is why we get all of the bad housing policies in most cities. It's not because single real estate developers do the vast majority of lobbying, but it's because there are active integrated incentives to have bad policy. Because this is a supports motion, we provide the solvency by which we get political will to provide better policies in terms of housing availability than exist in status quo, so we provide a root cause to solvency for the issue of housing. 2, liquidity and assets. The problem in status quo is twofold with lack of liquidity. 1, it makes it incredibly hard for firms to access wealth. They get more capacity for firms to access short-term liquidity, which is actively good for innovation. All those claims that you don't invest in risky firms. We think the only way you get innovation is when you invest in risky firms or you invest in startups, which have highly volatile stock prices. But 2, stock price is not good in a vacuum. For a company to be able to actually continue to grow, what they need to do is be able to do things like stock splits, and be able to be constantly buying and selling stock. A, because you get more accurate price evaluation, which means bubbles are less common, because you have more exchange of straight off or flow from the value of the stock. But 2, because you ultimately need that you just get more ability for these companies to get money or get investments because there's greater liquidity in the market. 3, it's just a better investment for people. My dad would have been way better off to be invested in the S&P 500 than his house he can't sell. But B, if people have crises, in status quo, what they do is they take a mortgage against their house, which saves them in debt, versus they can just sell some portion of their assets and get comparatively better. Finally, then, asset accessibility. I think I pointed out why you just get more ability to actualize assets themselves for all those reasons. So proud.
Seconds, and call upon the member of opposition in the closing opposition, please.
Is this loud enough?
Yes.
Okay. Beginning in 3, 2, 1. OG's got a lot of problems. I don't think having to model an entire new economic system perfectly should probably be one of their burdens, and I think it's honestly not probably in great faith if teams just continue to try and puncture holes. Let's talk about this for a second, because I think this is probably somewhat important. I want to note this is basically turning your entire tax system to a completely different economic model, and what that probably means that there's probably some reasonable, government doing reasonable things in this motion, such as they probably either actually enforce or update antitrust laws in such a way that, as my partner explained, they're probably going to be like, you don't have 99 out of 100 companies, no worries, kind of thing. They probably just look at whether or not you're engaging in non-competitive ways. I think that's probably a charitable reading. I think additionally, there are probably going to be some degree of metrics put into the thing which stop people from being forced out of their primary residence completely against their will or whatever kind of thing. But even if that's not the case, I want to note that these aren't absolute things like nationalization. Public acquisition laws exist. People are allowed to, if it's in the public good, you can build over someone's road if it means putting in an aquifer that feeds or gives 1 million people stuff. You just have to compensate them for that stuff. So I think teams should probably engage charitably, and you should probably judge it on what I think are in charitable grounds. We do explain why I think there's other issues with their case, but I don't think that just nitpicking aspects of an impossibly large motion are a particularly good path to victory for opposition teams. Okay, let's talk about CEO very quickly. First of all, let's take down this silly principle because it's obviously silly. So any kind of claim to like you have the inalienable right not to sell your property has to assume that you justly acquired it. This is why even libertarians concede this. This also takes out OO in instance, unless they actually want to claim that a vast majority of private property has been justly acquired, i.e. you built your home yourself and you didn't just inherit it from your family and all these types of things. I think they're probably going to fail in this regard. But even on a more basic level, obviously a principle has to be like unavoidable. It has to occur in all cases. I can probably think of a couple, like the one I just mentioned, in which we probably do want to violate someone's right to hold property, i.e. let's say if it's going to, I don't know, stop millions of people from getting a vaccine. I don't care if you came up with it in your brain. We probably should still nationalize it and save starving children. And that's the type of stuff. I want to note, I think this is probably just a round-winning impact by itself. Like insofar as on our side, the government can literally just go to, I don't know, AstraZeneca and be like, hey, we would like to, I don't know, vaccinate half the world, but you're stopping us because you keep protecting your COVID vaccine. We're going to buy that off of you because no matter what you price it at, it's probably worth more. You know who's the only person that can probably outcompete Google and Apple is the fucking US federal government if they think something is really important. They tell you they're going to collude. One, collusion is a form of antitrust, is monopolistic practices that can be broken up by antitrust, which is why they're literally suing Apple and Google right now for these types of things. So it's unclear that they can't just stop those types of bad practices. But we think it's just extremely important that government, when they think that there is a vastly beneficial public good, that they can override some private property things. And we think that in the instances that they do this, this will probably be net good. Okay, on their other claims. First of all, they tell you basically there's this pricing mechanism. I just want to note that obviously you factor probably in the sunk costs that you've already put in into the price that you're setting and stuff. And note that it just becomes an infinite regress. Like if another company just buys it, but then they have to factor in their price, and then someone else just buys it. Like eventually people will catch on that we probably just don't want to go in this endless like commercial developer loop of buying each other's stuff, but not factoring in. I think it's probably reasonable, again, that at some point people just realize you have to factor in your like capital expenditure, stuff like that. Again, also OG says like the prices will be set at a reasonable level. I don't know what the reasonable time is to like reassess the property price, but it's probably something that happened in this motion. So I don't think that really matters. Then they get this idea that they say all teams agree that with home ownership. I'm sorry, I don't know if they just didn't listen to Rhys's speech, but quite literally his whole thing was it probably everyone pumping all of their assets into home ownership probably don't matter. I want to know this is a round-winning extension because one, it sidesteps the whole question of what corporate entities are going to do. Quite frankly, we think it's good that the corporate entities are probably more at battle with each other because they're trying to outbuy each other's things. It's unclear why it's much better to like have to rent from like a large corporation versus a small corporation. They're both probably fucking you. What I think is important is Rhys uniquely tells you that average people are now putting their assets in better things, more liquid assets that they can sell. They aren't falling for the classic like first world thing of just owning a home is the absolute only thing that you should do. We think these are probably good things. So actually we are a team that says home ownership isn't the only thing that matters. We probably think that actually just renting isn't the end of the world and putting your assets. They tell you that rentals are going to go up. They don't tell me no reason for this to be the case. They tell you home ownership will go down. They don't necessarily tell me the reason. But even if they do, presumably if there's more rental units, housing goes down. Like this is OO's material, so presumably that works. Presumably if there's more of this housing being built because everyone's buying up your housing, then presumably it goes down. I don't quite frankly care too much about that because I don't think any team in the round actually explains that you're ever going to get affordable housing, right? They just tell people to it's unclear why they won't just do the things that they're doing now under status quo, which is you buy a bunch of property in Toronto and you turn it into expensive condos because that's obviously better for you than making like a bunch of affordable housing. Presumably government will have to step in some regard. And this is where I think OO also has a lot of problems. I want to note, first of all, they can't have their cake and eat it too. Either they want to run the laissez-faire model where they say like, oh, as little government regulation is good, but then they can't say, oh, but actual capital gains tax works really well, all these types of things. Note that for everything that they do that decreases market inefficiency, that is less money that they get for redistributional claims. I don't really care where they fall, but I want to note that they have to pick one of those things. If they're going to run the libertarian case, they can't also run, but capital gains tax is really good, it works effectively. But more importantly, Rhys just points out, a lot of this probably just looks like your R&D is just buying up other companies and other labs. That's what you do. You can count that as RFD. So it's unclear that actually leads to meaningful innovations that I tell you, and not that it is the type of conglomeration, right? Noting that that's what those types of things that you write off as your taxes. Before I continue, go ahead.
Yeah, two possibilities of an extension. One, the company sets the price of vaccines ridiculously high so the patent is so beneficial to them and the government can afford it, or two, governments acquire below its intrinsic value and the company stops it.
I honestly just am unaware of these like companies that can price it so high that a government couldn't afford it. I'm sorry, like Federal Reserves have like literally infinite money, quite literally. They print more of it. I'm unclear why it's not the case. I also just don't think that this is probably going to happen in most instances. But I want to note, even if we get one of these and save a bunch of lives, that's probably like a really good benefit for this round. Okay. The other problems with O that I think is largely, and it's the same problems that OG has, is they just don't explain why, even if, they don't explain what is the marginal benefit of these different allocations within corporations. They just tell me, oh, these people will buy up these people, and then these people will buy up these people, but they don't tell me why any of this is actually going to enact in a good way, especially if you believe the lobbying power is as strong as OO tells you. Probably none of this money returns to the people at all. What uniquely we tell you on CG is that average people are now less incentivized to trap their asset money into assets that probably aren't good for them. They're more likely to invest in good things like liquid assets, the S&P 500 and stuff like that, and they are likely to better recoup those money. We think that probably wins. We think we also just beat OG, one, for filling in many of the gaps that they missed, but also for having a case that explains for the average person why it matters, rather than just counting on shitty self-interest corporations to suddenly start doing the right thing. They're probably just going to avoid it all. Very happy to propose.
Let's go to that speech. Like now, by the opposition of the closing opposition case, closing half of the day.
I want to first talk about closing government. They say that this is going to mean that fewer people want to own a house. Firstly, they don't prove this. Why? In status quo, people pay property taxes about every quarter. It is unclear to me why it is that this form of property tax that they're proposing is going to be such a disincentive that they now no longer wish to own their house. Secondly, it is unclear to me why it is that people would not wish to own property because everybody needs a place to live, right? It is unclear to me why the benefits of owning a house, such as having an incredibly large asset that you can borrow against, such as being able to eventually no longer have to pay a mortgage when you actually own that place, meaning that you can safely retire without a fear of having an expense that you can no longer afford, because in the event that the market tanks right around the time that you're retiring, you may no longer have the monthly income to be able to pay for a place to live. By contrast, if you don't have a mortgage, you can still actually own that place, which is why it's desirable. Additionally, governments have always provided high levels of subsidization and high levels of economic incentive to people to be able to buy houses. It's unclear why it is that those things would change under their side of the house, so it's not clear to me that people would stop wishing to own property. Additionally, even if this was the case, I'm just not convinced that this is a good thing. Why? Because as Vidit explains, what's going to happen instead under their side of the house is that you're going to have a lot of these firms, like a lot of these houses owned by BlackRock. Why? Because as explained, when a firm like BlackRock owns the vast majority of housing, what ends up happening is that they're able to set a price that reasonably no one else is going to be able to purchase from them, because they're able to work with other private equity firms through the revolving door that exists at the management level of all of these firms, wherein they can then have a shared understanding of what the rough price is that these firms are wanting to set at, and thus not really wanting to compete against each other, because they don't benefit from buying back and forth from one another. They benefit from buying from people who are destitute and not necessarily able to continue to meet their payments. So they're not really going to compete with each other in this sense. What that means is that when these firms own these houses, they then can just precipitously increase the rent of all of these houses because there's nobody really acting against them. What that means is that the cost of living for a lot of people continually goes up, but there's no clear reason to believe that they have more money every month through wages or other stuff to that effect, which means that they're going to be treated worse. Additionally, when all of these firms have so much ownership over property, they then get to functionally lobby every city government to even larger extents than they've ever been able to before, to be able to make sure that their decision making about how local government should function with regards to how people live in property is exactly what they wish, because they literally own the houses that everybody lives in, and governments cannot refuse to listen to them because there's such a disproportionate amount of power between them, the public, and the government. What that in turn means is that you don't necessarily create good outcomes because the legislative framework becomes one that benefits these firms. You don't necessarily decrease the price of housing, and you lose all of the security that the public has. They don't necessarily explain why this is a good thing. They just say that they should invest in the S&P. Many people do this anyway through the retirement accounts. It's marginal. It's not clear how it is that they work in this debate. Let's assess the top half of the round. I want to first start off with opening opposition, because they talk about how it is that this is going to lead to an unfair evaluation of the housing market, because you're going to make it more expensive for firms to operate within this, and as a result, you're going to have this be too expensive for firms to be able to invest in. The problem with this argument is that governments can do two things at the same time, right? You can implement the case that they want on government bench, but also then provide subsidies and other sorts of incentives for firms who wish to create housing, right? So it's not clear to me that their impact of this being woefully inefficient actually comes to fruition. But what does happen is what we talk about in closing opposition. what ends up happening is that your average person who owns a property is likely to then overvalue the cost of their own home. The reason for this is as follows. They don't want to be put into a position wherein they are functionally made homeless with the requirements to vacate in a short amount of time because they like the place that they live, because they don't want to be able to be forced to move jobs or something like that if they can't find an equal house in their area, right? They might be underwater in their mortgage, so being forced to sell at that exact moment might make it even more difficult for them to be able to survive. The problem with this is that when this ends up happening, these people who already pay a considerable amount of their money every month to their mortgage, who have minimal amounts of spare money at the end of each month, now are taxed even more because they have reasons that are based on imperfect information, but based on their own fear of risk that makes them overvalue the price of these houses. This creates corollary effects, right? Which is that if every single person is artificially increasing the value of their house so that way they're not bought out, it means that the value of every house continues to go up because you're not going to be pricing your housing based off of the most recently sold values of housing. Instead, you're going to be pricing it off of this pricing index that government bench creates. This means that housing for your average person continually gets unaffordable, and it gets compounded by the fact that the way in which banks are going to be loaning people mortgages gets more variable. The reason for this is because it's not necessarily clear what the horizon is going to be for you to be able to pay them back. Why? Because if you're able to functionally change what the valuation of your house is based on your own determination of wealth, as opposed to objective determinations of wealth, which the bank that the bank uses currently, that in turn means that they're not necessarily inclined to give you favorable conditions for any sort of mortgage that you take on, which in turn means that people have to either one, acquire more capital to be able to purchase a house, or two, pay more each and every month, which in turn means that these get more unaffordable, and you continue this consolidation, which we previously explained is harmful. This is the impact that is certain, because whether or not governments are going to be able to implement a variety of different policies at the same exact time is not exactly clear. But what is clear is that people have imperfect information, and as a result, they also are reliant on so many other actors to be able to have any sort of access to housing. Opening if you have it open.
So housing ownership is one of the most politically salient topics in the country. There's no way in a whole neighborhood is going to let BlackRock buy out every single house, and it's not true in the status quo that they own half of residential housing.
Fact claim they do. So, why? And they've been investing in it more and more because a lot of people don't have that much money, and land is incredibly valuable, so it's a very stable asset for them to do. They can outbid literally everyone. So that's just not true. So let's assess on opening government. The problem with opening government is that, in a similar way to opening opposition, governments can do two things at the same time. It's unclear to me why, if they oppose vacant housing, why we can't tax that. If they want people to use their property, cities like Toronto tax inefficient usage of property and want people to use it more efficiently. So it is perfectly possible that we do that rather than this insane policy. Lastly, it's just not clear to me why it is that renting is bad. It is actually quite good for there to be rentals. Why? Because not everybody knows what they would want to do with a particular piece of property, but they might know what makes a good piece of property. That is to say, I might not be a good store owner, but I can know what makes a store good for people to use. I might not know what I want to run with a particular business, but I'm aware that many other businesses might have a chance to live for 5 to 10 years. Then they want to move on to other things. They get bought out. It makes it easier to start a business because you can afford $3,000 a month, but you might not be able to afford a down payment, right? In a lot of instances, rentals makes it easier for people to be able to enter the business world in the first place. So it's not necessarily clear to me that this is an a priori bad that they assert to you. Proud to oppose.
I mean, it's fine. You can sit over there and I can sort of...
It's fine. Either is fine. We're missing Arpi and Adam, aren't we?
I'm messaging now.
Cool.
Carl will be here. Carl will be email.
Well, I'm not annoyed. It's you guys who must be annoyed because you're getting a delayed call instead of, I can give you away whenever. I also forgive them. They're nice.
Especially due to the fact that it's not your fault. When did the round end?
Huh?
When did the round end? When did we finish debating? How long was it?
The dealer was exactly 15 minutes and 5 seconds. A bit over what I normally go. But it was fine.
Yeah, the call is ready. Okay, great. See you soon.
Shocking that this solution might have been difficult to integrate.
Did you know that we have to recreate the tax system? It's time to debate the new tax system.
Okay.
What would I do without?
All right. Let's start. Starting timing now. I'll first go on to explain the call, then a few pieces of general feedback, and then the adjudication. We were unanimous. The call is the following. The first goes to the team in opening opposition. The second goes to the team in opening government. The third goes to the team in closing government. And the fourth, unfortunately, goes to the team in closing opposition. A couple pieces of general feedback. The first is to explicitly track some of the argumentation that preempts your case. So a significant amount of the arguments in this round ran claims that were either parallel to or preempted by earlier pieces of framing and substantive matter, which made it hard for us to credit that substantive matter in the context of other teams in the round. This played quite a significant role in the placement of both closing teams, so I'll flag it now. The second piece of feedback, and this is just, I think, good feedback in general, is just to be more charitable and to assume that teams have proven their claims, and as opposed to responding to the most uncharitable version of the case, or responding to the headlines of the case, to respond to the underlying mechanisms that teams give for the argument. This will also become more important for all teams as we go on. Opening government forwards two arguments. Their first frame is that in the status quo, it is often speculative, it is often profitable for you to speculate on assets instead of developing assets, insofar as you don't have to pay capital gains tax because you aren't actually selling the asset, and thus you often take out loans against the value of the asset, and thus you gain some degree of value by sitting on the asset as opposed to actually making the asset profitable. Their claim then is that at the point at which you have an incentive to want to sell the asset because you want to price this so such that you do not pay a massive amount of taxation, this creates a massive increase in the housing supply, and this is good because in the status quo there is a housing shortage in the vast majority of the world, and thus we increase the amount of available housing supply. Secondarily, in DPM, they explain a claim on monopolization. Namely, their explanation here is that at the point at which it's very expensive for the namely, their explanation here is that at the point at which it's very expensive for a big firm to protect a piece of intellectual property or land that they are not using, i.e., if you're not making money off of a particular product line, it's then more profitable for you to sell that, and that is good insofar as the asset becomes productive. The way this is explained is now you have an incentive to produce more drugs, now you have the capacity to be able to innovate more, and this is presumably good insofar as it increases the ability for individuals to be able to access things that better their quality of life. Their further explanation here is that at the point at which you have now an incentive to invest and to build land, this is good insofar as you have a greater amount of housing, and this is a benefit for individuals in the round. What does opening opposition say, and how does front half interact? Opening opposition, similarly, forwards two arguments. Their first claim is a claim on monopolization. That is to say that big companies can buy key assets from smaller companies easier now, insofar as small companies will be unable to pay a significant amount of the taxation due to capital constraints, i.e. if you're a startup or a Series A firm, often you do not have a large amount of a capital buffer, so if you have to pay a large amount of taxation, that's often something that's unprofitable for you to do. My problem with this first claim from opening opposition is it's not clear initially what the scale of the taxation is, although this becomes clearer later on, which I will explain because that ends up proving quite a lot of things. Opening opposition then explains why this distorts the market. That is to say, at the point at which you have to sell a lot of housing and increase the housing supply massively, this is bad. Their explanation here is that you create an incentive for the rich to stop investing in illiquid assets and to invest only in liquid assets. That is, at the point at which you aren't being taxed on stocks and aren't being taxed on bonds, your incentive is to sell a lot of housing on the open market. And this particular incentive is one that is harmful insofar as it stops you from developing new land and new housing construction because that is unprofitable for you to do relative to you just investing in the stock market. Their explanation then is that this is a harmful thing insofar as on the comparative, capital gains taxes are fine, insofar as you pay that tax towards the end, so you aren't burdened with a high level of taxation during the development of a new land or during the development of a new property. How then does top half interact? There is also, I want to particularly flag an incredibly strong piece of framing that comes out in Leader of Opposition, which is an explanation as to why the tax on illiquid assets has to be extremely large. That is to say there's an explanation as to why the government in the status quo has a significant amount of debt and has a significant amount of obligations they have to meet, i.e. the government has to fund itself with taxation, fund defense, fund healthcare, fund paying off its debt relief, and thus insofar as they're now taxing a smaller pool of assets, that is only illiquid assets relative to the larger pool of both liquid and illiquid assets to some extent, this tax has to be extremely high. How then does top half interact? First, on the monopolization clash. Opening opposition narrowly beats opening government. The explanation here is that while OG and DPM is able to explain why there is an incentive for big companies to sell their assets to a productive firm, large firms are still able to weather the tax burden if owning the patent is critical for their business line, which leads to some degree of monopolization. The comparative, though, is that opening opposition explains why small companies are often not able to burden this, and thus why they are often pressured to sell to these larger firms. There is an explanation as to why this often results in more monopolization, because antitrust regulation often takes time to implement, because it is the case that often you can justify the acquisition as fine because you aren't buying a company, you're just buying part of their assets, which means that on monopolization, I narrowly believe that opening opposition is able to show that you're able to monopolize more. So I do believe your claim that you make assets more productive, but insofar as that claim is not weighed against the monopolization analysis in opening opposition, and insofar as it is somewhat intuitive that you have an incentive to want to be productive with the asset or the patent that you have, I'm unclear what the margin on that claim is relative to what opening opposition provides. Secondarily, on housing, the claim from opening government is that you create an incentive to put your houses and land on the market and to flood supply, which opening opposition agrees with. What is contestable is the impact that derives from this argument. In opening opposition, there's an explanation that there's no incentive to want to develop the vacant land because investors will just want to invest in stocks and bonds and other services to avoid paying the extremely large amount of tax as characterized in Leader of Opposition. What this then does is prove something quite devastating towards the opening government case. Because if there is no incentive to want to develop vacant land, and there's a massive amount of housing supply that's on the open market, which means you are able to, a massive amount of supply on the open market, which means that buyers have a significant amount of leverage over the individuals and corporations who are selling the property. There is then no incentive for you to be able to, there is then no capacity to be able to invest in and to be able to develop the land that you characterize. Which means at best, opening government's claim on housing is symmetric, but at worst, it is actively harmful. Because in DLO, there's an explanation as to why speculation is often unprofitable, especially because, as opening opposition correctly identifies, property taxes in the status quo are not self-assessed. They are usually assessed by the government and assessed by the market, because there's a pretty strong incentive for the government to want to collect taxes as opposed to allowing individuals to set taxation for their own property, i.e. it's not clear why governments operate like this in the status quo, which means, on balance, I'm not clear that you do want to engage in speculation versus developing housing on opening opposition. And I am very clear that on opening government, there is no incentive for you to want to develop vacant land, which in PM you characterize as a bulk of the reason why the housing market is something that is so constrained right now, which means on housing, opening opposition is able to beat opening government. Is that clear? Moving on to closing government. We get three pieces of extension matter from closing government. The first is some framing as to what property tax looks like in the status quo, which is consistent with the frame we get in opening opposition. I don't think this is a knife because it operates both on opening opposition's frame and because the opening government premise that property tax is self-assessed is something that I think the AIV knows to be empirically false in the vast majority of contexts. So I do credit the broad frame that property tax is done poorly. Closing opposition then has an extension on why liquidity is good, because you invest in more productive assets, and then this is good. And then their explanation here is an explanation on monopolization. The broad problem I have with the monopolization extension is that the reasons for the monopolization extension are in DPM. So specifically, the analysis that you provide as to why there's an incentive to want to sell productive assets to companies that are going to use them is explicitly in DPM and substantiated quite well. So it's challenging for me to credit this argumentation both on opening government and on closing government. Closing government's strongest extension matter is their claim on political incentives. So the extension goes as follows. The vast majority of people in the status quo have an incentive to keep the personal value of their property quite high. That is why we get housing policies which constrain the development of housing. The explanation here is essentially, you don't want the value of your house to fall, so most people who own their homes are NIMBYs, and they use their political capital and their political leverage to stop the development of more housing, insofar as the development of more housing would make their capacity to take out loans lesser. I buy this premise. What I don't buy is that this is comparative, because you are missing a burden on why on the comparative there is an incentive to want to develop this type of housing and this type of land, which again, opening opposition explicitly explains why this incentive does not exist. So you need to explain why there is an incentive absent this, or why there's an incentive given this policy for developers to want to develop the kind of land that you characterize. And insofar as I'm not clear why that's true, I am not clear why the abolition of NIMBY policies, given the accepted frame of top half, is going to lead to the increase in housing supply that you end up claiming. So you have to be responsive towards the reasons in LO to explain to explain why this tax is extremely high, and to then explain why you're likely to be able to do this. And so as a result of this, I think you're missing quite a significant burden, and thus are unable to fully substantiate this. I do believe that you are able to prove that you reduce the political incentives to create these bad housing policies, but for similar reasons, this is insufficient to beat opening government, because opening government does have a standing claim on monopolization, and they do have a standing margin on the ability for you to make assets productive, and an incentive explanation as to why assets being productive is quite a good thing. Insofar as I buy this impact to some degree of certainty, it's able to beat the closing government extension. Lastly, bringing in closing opposition. Closing opposition is a challenging thing to place in the round. The first extension on the collective ownership of housing by private equity firms is quite explicitly a knife of opening opposition. The explicit frame of opening opposition is, at the point at which you have an incentive to want to be able at the point at which you have an extremely high amount of taxation on illiquid assets, you are going to have an incentive to want to not invest in illiquid assets. The premise of this extension is that you want to invest a lot in illiquid assets because you have an incentive to want to collude to dodge taxation. These two things are not compatible with one another, and that claim from opening opposition is substantiated to quite a significant extent. So we cannot credit that extension. The second extension that we have is an extension on this undermines the ability of governments to do things like urban planning. And I'll find this is a problem for both closing government and closing opposition. I don't know why governments in the status quo, absent this motion, don't have the ability to buy large amounts of land or large amounts of property, and this is not something that is explained within closing opposition extension. The third, and I think the strongest extension in closing opposition, is a principal claim that you should not have to sell something that you do not want to sell, i.e., you have some claim of ownership over your family's ancestral house, over some level of property that you need, and thus, insofar as it's your property, it is wrong for the government to want to force you to sell this property, especially given the quite persuasive explanation in WHIP that explains why you're often going to be pressured or forced to sell this property, and you're not going to meaningfully consent to the sale of your property or your land. The explanation here is that often you cannot afford the taxation, especially insofar as you're likely to overprice and overvalue your home. I credit this extension. The problem is, I don't think it's able to beat either government team. So first on closing half. Closing government has quite a few good destructive responses towards this extension. The first thing they point out is that the principle for you to own your property is not an absolute principle, and is one that we frequently violate in the status quo, i.e. with things like government policies of eminent domain. There's an explanation as to why often your inheritance is morally arbitrary, and why you often do not own a lot of the things that you have a degree of ownership over. And thus it's unclear to what extent the closing opposition extension and principle is something we ought value. But secondarily, closing government is still able to claim a margin on the political incentives analysis, because the closing government extension does cross-apply to quite a few cases. So if I buy the analysis from closing government that there are incentives for individuals to want to protect their intellectual property and want to protect their housing, insofar as that, and thus they lobby the government quite extensively for that, this does lead to an implicit impact of there being an incentive in the status quo to make patents and to make intellectual property and to make housing inaccessible, which is still a standing and certain impact in the context of the round. Comparatively, I'm not clear how the principle is something that is fully substantiated, and I'm unclear why it's able to weigh over the practical argumentation brought by closing government. Weighing to substantiate why we ought prioritize the principle over the practical claim from the closing government could likely have flipped this claim, but absent that, I credit closing government over closing opposition. Lastly, on long diagonal and on opposition bench. First, on long diagonal, opening government does still have, as previously mentioned, a standing margin on monopolization, and they have a standing benefit in the short term on why an increase in the housing supply is still good, because it means that in the short term at least you're able to buy houses for a cheaper price, and thus why you're able to get more homeless shelters and all of these things. Absent direct responsive matter to this extension, it's hard for us to credit closing opposition over opening government. There are some responses. There's an explanation as to why it's unclear why you would not wish to own property, but as previously mentioned, that explanation is a knife of opening opposition. These two things are not logically consistent. That's placing a double burden on the government bench. So I cannot credit that responsive matter relative to what opening opposition has said against opening government's analysis. So for that reason, the opening government argumentation is still standing on long diagonal, and thus opening government beats closing opposition. Lastly then, on opposition bench. Opening opposition has quite a few large and standing impacts on first on monopolization and on innovation, and secondarily, as previously mentioned, on housing. It's hard for us to weigh the principal extension over that analysis in opening opposition, especially given a direct analysis as to why we ought prioritize the principle given the opening opposition practical case that exists. But secondarily, even if we do, a significant amount of the principle is analytically contingent on opening opposition, because the explanation as to why you're likely going to be pressured to sell a lot of your things is an illustration of an argument that is already in opening opposition to illustrate why the high taxation puts a significant pressure on you to sell the asset. That's the mechanism by which opening opposition is able to access their claim on housing and access their claim on this, especially given that opening opposition has analysis to explain why the tax is going to be extremely high, which is an independent mechanism that proves a large portion of the closing opposition impacting. For that reason, that is the call.